In this presentation, we're going to set up and take a look at the sales tax settings within QuickBooks Online. There's three basic components you want to think of when you set up the sales tax within QuickBooks Online. One, you want to think about the location. Where are you located? And we have to set up the sales tax per location. Then once we have the sales tax set up, then we need to think about the items. What type of items in terms of typically inventory items are going to be applying sales tax to them. Those items need to be adjusted so that when we create things with them, such as invoices and sales receipts, the sales tax will then calculate accordingly. And then finally, we want to consider the customer. In other words, are there any customers that would default out of being assigned the sales tax in a situation where the item would typically have sales tax? So in other words, let's go through that one more time. We have the location. We got to set up the sales tax, which will typically happen regionally. So we'll have different sales tax depending on where we are. For example, if we're in the United States, the sales tax is not a federal sales tax. Therefore, it doesn't blanket the entire United States, but rather is a state and local sales tax. And therefore, the sales tax will differ from state to state. If we provide the location to QuickBooks as we're setting up the sales tax, QuickBooks system will then be able to apply the proper sales tax just by the location, which is great. So then we just set up the sales tax within the system. Then we need to think about, okay, what type of items do I have to apply sales tax to? And when we think about the items in the United States, typically we're talking about the things that we sell, the inventory items. So typically if we sell inventory items like the guitars, we have to apply sales tax to them. However, service items, like for example, if we have guitar lessons or the hour service or what this and that in our system, then those typically do not have the sales tax. Therefore, we're going to go through the inventory items in our system and pick up and say that they are eligible, are required to have typically sales tax. And therefore, when we create an invoice and pick an inventory item, then the system will apply sales tax to that inventory item. And then lastly, if we're thinking about a customer, we also want to consider the customer, because when we make an invoice or sales receipt, we have to choose a customer and an item. Now, again, the item is typically the thing that's going to be driving as to whether we have sales tax or not, but it might be the case that we have a particular customer that is exempt from sales tax. So if we're dealing with particular types of customers like a charity or something, there could be some reason why the customer would not be subject to sales tax. So in that location, or in that situation, then the item would be subject to sales tax. But when we pick that particular customer, which we made exempt from being required to pay sales tax, then the customer would kind of override. And even though the item would be applied sales tax, it would not be applied to that particular invoice to that particular customer. All right, let's see what this looks like within QuickBooks Online. Here we are in our Get Great Guitars file. Let's take a look at a form first to see what we're talking about. If I open up a new and I go to a form, we want to look at an invoice. So if we take a look at the old invoice form here, or a new invoice form, we're going to be opening up. And then we're going to choose obviously a customer up top in order to create the invoice. So again, most customers are going to be either subject to sales tax or not, based on just basically what they're purchasing. But in any case, we would have the customer. Then we're going to have the item down below. So we're going to have the item down below. We have different types of items. Some are going to be the service items, like a diagnostic, which typically for the US will not have sales tax applied to it. And then inventory items such as a guitar, like the Epiphone Les Paul here. So if I was to select this, don't record this. We're not going to record this. Then we'd have this calculated. Notice that there's no sales tax being calculated on it. And this is an inventory item where we would expect it to be calculated. Therefore, we want to add a setting down here so it will then calculate the sales tax for us. I could go to this link and get into it here. I don't want to do that, though. I want to set it up proper. I want to go outside of this invoice and set it up so that it'll calculate the sales tax for us. That means the sales price will be $500. Then we're going to be adding to it whatever the sales tax will be for it. We get to keep the $500. The sales tax, of course, then we have to take from the customer and give it to the state in most cases, in the case of the US typically. So I'm going to close out this invoice. I'm not going to record it. Are you sure you want to leave? Yes, without saving it. And then we're going to consider first the tax tab at the bottom. So I'm going to go to the taxes tab at the bottom to consider setting up or see how to set up the actual sales tax. And if we have no sales tax set up, it's going to say this. Let's set you up to collect and track sales tax. Add sales tax to your invoice and receipts, plus track how much you owe. I'm going to say, all right, that's what I want to do. Now, once again, it's going to be tracking by the location. We put in our practice problem that we're located in Beverly Hills 90210 here. So it's going to pick up that. That's where it's going to assume it's going to be. Now, note that if you have multiple states that you're doing business in, then it gets a bit more confusing as to, what sales tax you're going to apply to what state. So if you have one state, you're doing business in one state, and you can apply one sales tax from that state, that's pretty straightforward. You can set that up. If you have more complex situations where you're in multiple states or multiple regions which have different types of sales tax, and you're confused on when and where you're going to have to apply different types of sales tax, then you probably want to get some get some more advice in terms of how to exactly set up those multiple types of sales tax. Here we're going to have one sales tax location. That's going to be in California. So I'm going to say next. So it says we calculate sales tax based on what you sell and where you sell it. If you sell in multiple locations, we calculate the correct sales tax for each one. And you can learn more about that. You can do your research if you have the multiple locations. Do you need to collect sales tax outside of California? We're going to say no in our case. We're just going to say no. We just have the California sales tax here. What agencies do you pay? And then we have the California Department of Tax and Fee Administration. We're going to keep it at that. And then we're going to say next. So then we have the automatic sales tax is all set up. Give it a spin by creating your first invoice. So we could create the invoice here. I'm going to go ahead and close this out so we can see an example of an invoice at some other location. So I'm going to close this out. So it says then, how often do you file taxes? You can find this info on your sales tax business registration. So when we set up the sales tax, then we have to obviously collect the sales tax when we make sales. We have to collect the revenue, and then we're going to have to pay that sales tax to the state in our case. And the question is, well, how often do I have to do that? And typically, we would be paying that either monthly, we might have to pay it weekly, we might be able to pay it quarterly or even yearly. So in other words, depending on the place that you're at, the state that you're at, or the region that you're at that's collecting the sales tax, they will determine how often you have to take that sales tax, which you have taken from the customer, and pay it then to the state. Now, typically, it would result then you would like to do that less often if possible, because it's kind of a burdensome thing. And obviously, the state wants their money more sooner if you have more sales. So in other words, if you have very few sales, then maybe they only want their money. You only have to do this process quarterly or even yearly. If you have a lot of more sales, then maybe they want their money monthly. And if you have a lot of sales, then maybe they want their money even sooner than that. But so that's going to be the process. If you can't find find it or it changed, check out the table to see your business fits. So we have the California Department and fees, and we have the filing frequency, and we're going to say our filing frequency will be monthly. So we're going to pick the monthly filing, start in January. So we're going to say, do we want to start in January? Yes, we'll pick up the January start. California filing frequently requirements. So this is basically the information that would kind of determine typically how often you have to file. So average monthly liability between 0 and 100. So that your sales tax that you calculated that you have to collect is 0 to 100. Then only annually would you have to file. And then if it's over 100 to 1,200 for the average monthly liability, again, the sales tax, not your sales, but your sales tax on it, then quarterly every 3 months. And then if it's over 1,200, then you want the quarterly prepaid. You want it quarterly but prepaid. Okay, but we're gonna go with monthly up top because we want to practice a monthly transaction. We're gonna have 2 months of data that we'll be putting in place. So we're gonna go ahead and save that. Okay, so that's gonna be one step that we have. So we basically set up the sales tax and we have the location set up. Next thing we got to do is go to the items that are going to be applied to the sales tax. So those are going to be the inventory items. So to do that, I'm going to go to the sales tab on the left, and we're going to go into then the items. So we want to go to the product and services. Now I'm going to go down through the items that apply sales tax. Now I'm going to close out the hamburger. Now note that it would be best if you had the sales tax set up before you enter the items, and you can do this at one time. But obviously we've already set up the sales tax. We've already set up the items, and we want to practice setting up the sales tax with the 3 steps involved. Therefore, I'm going to go through these items that sales tax applies to, and I'm going to edit those items. So in other words, we're going to look at the items that are going to be inventory items, not the service items. We can sort by this column by selecting this little arrow. And if I sort by this column, and then I sort it again. Now I have the inventory items up top. These are the ones that we need to apply sales tax to. That's typically the case in the US. We apply the inventory items to the inventory, not to the service that we would provide. Then we can go ahead and edit these items. So I'm going to go back over here and I'm going to edit the Epiphone. And it looks like it actually applied it out. If I scroll back down, we have the sales tax here, and it actually put in here taxable standard rate. If I select the drop down, then it has taxable standard rate or non-taxable. So that's the one we want. Looks like it's good. I'm going to close this one back out. Let's check another one. I'm going to check this item and open up the item detail. And then I'm going to scroll down to the sales tax standard rate. So it actually filled those out for us. So those look good. So the items are good. Let's and check these service items now, because these service items down below should not have sales tax. So maybe we have to remove the sales tax from the service items. So I'm going to go down to the late fee for the first service item. I'm going to select and edit that one and see what is included in it. I'm going to scroll down to the sales tax area, and this one says it's taxable standard rate. So I don't want to apply it to the sales tax, to the service items. So for the service items, I'm going to have to change those and say that they're non-taxable. So I'm going to change that to non-taxable, save and close. And that was and then I'm just going to do this for all of the service items. That was for the late fee. I'm going to go to the diagnostics. I'm going to edit the diagnostics. Scroll down to the sales tax. I'm going to make it non-taxable. I'm going to save and close that one. Next, we have the partial service. I'm going to edit the partial service. Scroll down to the sales tax. I'm going to remove that, say that's not taxable, and save and close that one. Then I'm going to go to the sales service here. I'm going to scroll down to the sales tax on that one. So scroll on down to the sales tax, make that non-taxable as well. Save and close. And then we have the hours. So I'm going to go into the hours, open that one up. Scroll down to the sales tax. And I'm going to make that one non-taxable as well. Save and close. Then we have the tune-up. I'm going to go to the tune-up. I'm going to edit that one. We're going to scroll down to the sales tax, and I'm going to remove the sales tax. So we're going to say it's non-taxable. And then we have one more time with the hour service. I'm going to edit that one as well. Scroll down to the sales tax item and say that that one also is non-taxable. So I'm going to say non-taxable, save and close. Okay, let's test this out now. Let's open up another invoice. We're not going to actually record the invoice. We're just going to check it out here. So we're going to open up. We're going to have a new item here. We're going to be opening up an invoice. So if I was to open up an invoice here, we can populate the invoice. Let's just pick a customer. I'm going to pick Anderson Guitars. We're not going to record this again, by the way. And we're going to scroll down and then pick a product. Now, if we pick a product like a Epiphone, a guitar that we're going to sell, a thing that we're going to sell that we apply the sales tax to, then we will be applying the tax and have the sales tax. Now, sometimes if it doesn't calculate, you click off of it, and then it should calculate the sales tax for you. So there's the $500. There's going to be the sales tax on it as well. And then if you want to see the math on the calculating of the sales tax, you can click on the example on the C math here, and it'll give you basically the calculations. The state, Los Angeles, and the district, that's where it's coming up with that 950. If you wanted to override this for some reason, you can override this amount. So if you're just doing a practice problem or something like this and you want to override and just put in the sales tax for a practice problem, you can do that. We're going to keep the sales tax as is here, and you could basically look at the rate too by saying it's going to be the 47.5 divided by the 500. And that's going to give us that 9.5% if we move the decimal 2 places over. So then if I chose something else like a service item, like a diagnostic service of some kind, we're going to say, we're not going to have the sales tax checked off there. Therefore, that portion of it wouldn't be included in the calculation of the sales tax. It's not part of the taxable amount, as you can see, even though it's increasing the total amount over here. So if we were to think about this, now we can think about the invoice and what's going to happen when we record the invoice. It gets a little bit complicated, but note how easy it is to populate the invoice, even if you don't understand all the components to it. Look what we had to do to get the invoice to be able to populate easy. We had to enter the customer, and then the customer has the billing address and all that kind of information. Then we had to enter the items, including the inventory and the non-inventory, and basically be able to assign the items as taxable and non-taxable, and we need to be able to set up the tax agency that we're going to be using to apply the tax. Once you have that set up, making an invoice is very easy. Then what's going to happen when you record the invoice, again, the person putting in the invoice probably doesn't know that, what's going to happen in terms of the financial statements, but it's all set up and it'll work for us. So what's going to happen? Invoice means accounts receivable is going to go up. The other side is going to go to sales. So the AR, accounts receivable, is going to go up by the full amount. And we're not actually going to record this, by the way. Just if we were to record this, it would be going up by the $547.50. And we'll see, of course, examples of this in the future as we do record invoice. And then the other side, however, is going to be sales. And it's going to go up not by the full amount, $547.50. It's only going to be going up by the $568, the amount of sales we recorded, not including the 9.5% on the sales tax. The difference between the two, $47.50, is going to be recorded as a liability on the balance sheet because we owe it to the state. Then we're also going to have to deal with any inventory tracking, which we have a piece of inventory in terms of the guitar. The guitar inventory is going to be going down, but not by any number on this invoice. It's going to be determined by the amount that we put into basically the cost of the inventory. So this invoice will be driving down the inventory as we record it, even though the amount isn't shown on the invoice that it will be driven down by, because we don't want to show that to the customer. And then the cost of goods sold, the related expense, will also be going up for the same amount as the inventory cost amount. Again, that number not being on the invoice. So we'll take a look at examples of that many times in future presentations. The invoice is actually one of the more complicated type of forms to understand in terms of populating it. It's easy to populate, it's easy to enter the data, but it's more difficult to think about all the components involved that we've been now basically set up. And then there's a lot of different accounts that affect. It's not just two accounts that are going to be affected on the financial statements. So we'll take a look at examples of those when we record these invoices. So I'm going to close this back out now. I'm not going to record it. We're not recording it yet. We'll see some more in the future, and it's going to be great. But then we're going to go to the customers. The last component here is on the customers with regards to the sales tax. Let's take a look at a particular customer. I'm going to go into the Anderson Guitars, and then I'm going to go into the Edit tab up top. And just note that the default typically is that the customer will be taxable, but the tax information is on this tab. So if I select the tax information, and if for some reason we have a customer that's not taxable, they're tax exempt, like they're a charity or something like that, so then we would select that they're going to be a tax exempt customer in that case.